Hi, this is Jason Penrose here with the Penrose Team. I want to talk with you briefly about mortgage rates and home prices. I know a lot of sellers have hesitation about selling their home and moving because they've locked in a super low rate, 2, 3, 4%, and they don't want to give up that rate to buy a home at a higher rate. I want you to see something on a graph that might make you second guess your decision. When you look at home mortgage rates here, back in 2008 and 2007, rates were around 6%. Right before, though, the recession, rates had hit about 6.69%, just under 7%, very close to where they are right now. Okay, we go into recession. What happens? Rates didn't start coming down until later into 2008 and 9. In fact, they didn't even hit bottom on rates until about 2013. Okay, so we go into recession, the Fed starts cutting rates to kind of stimulate the economy. But look at how long it took for rates to go from 6.69 right before the recession all the way to their lowest point of 3.42 or 3.3. Let's look at housing prices in the valley during that time, okay? So here we are, right before the housing recession here. Rates around 6.69%, okay? The Fed starts cutting rates. The Fed doesn't even get to the bottom on rates at 3.5% roughly until 2012, 2013. Well, that's when home prices started to come up, right? Property values had come down over 50% in most cases, and rates had hit the lowest level they've been in forever, right? So you got low rates, low home prices. What happens? Home prices go up. Now, look at the explosion in home prices between 2020 and 2022. What caused that? COVID? What happened was the Fed cut interest rates to stimulate the economy to prevent a full-on recession. So they cut interest rates to stimulate the economy. Well, it stimulated our housing market. Home prices exploded. Inflation got out of control, and the Fed had to step in and go, wait a minute, this is getting way out of hand. We got to start increasing rates to cool inflation and to cool the housing market. So in quarter 3, as you can see here, quarter 4 and quarter 1 of this year, home prices have been dropping roughly 1% a month. So you can see that home prices are just now starting to come down in the last 3 quarters. This graph here only shows the first quarter of 2023. The second quarter's numbers are not being reported by FHFA.gov as of yet. You'll notice that right before the last housing recession, home prices went up about 60% in 3 years. Look at the last time when our housing market went into recession, home prices went up about 60% in 3 years. What was the catalyst for this? 9/11. The Fed cut rates, right, to stimulate the housing market and the economy to prevent a recession. It led to a housing boom. And of course, that housing boom caused inflation. And then here we go into a recession and banks failing and, stock market selling off and then home prices coming down. So realize when the economy went into recession last time, it took till the end of the housing crash before the rates came down super low. So if we go back to the interest rate chart here, lowest point they ever been was 2020 to 2021. So for rates to get back down to here, they have to come down from way up here, up in the 7s, which is where we were right before the last housing crisis, okay? So if rates come down to where you want them to be to make a move, your home value could be drastically reduced. Now, when I met with sellers back in 2007, they weren't happy with the price they could have got for their home versus what they could have got for it back in 06. But I can tell you they were happy in hindsight when they did sell in 07 because 8, 9, and 10, they would have lost all their equity. And in most cases, they would have gone completely upside down on their home, and they would have had to short sale if they wanted to move or rent it out and keep a tenant in that place for roughly 10 years to get back to break even. Or, they would have had to have, a lot of people just walked away from their homes and gave them back to the bank. So most sellers right now have equity in their homes, which means they could make a move. They could use that equity for a down payment on a new home, and they can make their move, and it's possible. If you wait till interest rates come back down, if they come back down to those levels, home prices would come down most likely a lot more. And most people wouldn't have enough equity in their homes to make a move, and a lot of people would be completely upside down. Now, when Jerome Powell comes out and says that the housing market is softened a bit, but he's looking at possibly hiking rates 1 or 2 more times before the end of the year. So a 1% increase in a mortgage rate decreases a buyer's purchasing power by 10%. So if they were to raise rates and mortgage rates were to go up to 7.5%, 8, 8.5%, 9%, a buyer's purchasing power could drop a lot, which means home prices would start coming down in most cases because the buyer can't qualify. And so sellers start dropping their prices so buyers can qualify to buy the home. So my suggestion would be pick the home you want to be in for the next 10 years. Because if this unfolds like it did the last time, then if you don't sell or make a move in the next year or two, you could possibly be in that home for a very, very long time. Now, nothing's guaranteed, right? Everything's probabilities. Based on what we're seeing here, based on what happened the last time, rates were around 7%, and we went through a housing crisis. It took a long time to get back to even. In fact, it took from 2007 to about 2018 to get housing prices back to where they needed to be from the top here, okay? So that's a long time. So if you're waiting for lower rates, bottom line is to get lower rates like we did the last time, it took a long time for rates to get back down there. And they only got at the bottom once the housing crisis had unfolded and home values have been cut by 50% or more in our market. So just something to keep in mind. Pick the home you want to be in for the next 10 years. That would be my suggestion. If it's not where you're at now, if you're thinking maybe a year or two tops before you want to move, maybe you want to consider moving those plans up. Now, what if interest rates go down, home prices go up? What if the market explodes and goes into another big boom? Well, if you sold one home and bought another, it all comes out in the wash. So just pick the home you want to be in for the next 7 to 10 years would be my recommendation. That's the safe way to play it. All right. If you have any questions, feel free to give me a call. Look forward to talking to you soon. Thanks. Bye-bye.